as the business leadership.
Welcome back. Well, the market is not off the day's low by much, but has come off a bit from the low point. So that's good going for the bulls. That at least there's been a bit of a recovery from the low point. And Jayakumar of Prime Securities is with us. Of course, this is our 16th birthday, and Jakes has been on the channel for all of the last 16 years. Jakes, hi, good to have you in our studios.
Thank you very much, and birthday greetings to everyone here. I think, when you look back, I think several years from today, you'll or several decades from today, you'll look back and say this was one more milestone in a long journey to achieve business leadership. So I think all of you can feel justifiably proud that you've created a fantastic brand, and I think something that investors look at with a lot of should I say, hope. There's
Sure.
Not just information and analysis, which I think everybody gives you, but I think a certain sense of being first, the last word on the subject. If that's paradoxical, then that's the way it is.
So you've been commentating on the markets for the last 16 years. What has changed since the first time you spoke and now?
Grey hair, but jokes apart. I think what's changed is the ability to look at information. I think information today is accessible, and sometimes we tend to believe that we suffer from information overdose, and I think that's the real issue, really. That for a lot of people who watch channels, to be able to take away saying this is what I'm supposed to do based on all that I'm reading and getting, I think it's a big issue.
Yes.
So if you go back in time, we used to struggle to get information which is with 3-4 days late, and we used to talk about things that happened last week and how that will impact us, and today we talk about something that happened literally a few minutes ago that's impacting us. So I think that's one big thing, but what hasn't changed is probably the fact that valuations finally and a stable mind is what is needed. And I think in the daily sort of hurly-burly of markets, we tend to forget that. So one of I think the big shortcomings, if you will, over a period of time is because money has chased ideas and information. The concept of momentum investing has taken on, and crowded trades has taken on a very serious meaning. Yeah. So, and if you think logically today, what markets are suffering from is good companies and crowded trades is where investors tend to put money in, and which is where short-term returns don't come by. So if you see the way the markets have moved also, I think they're telling that story.
Indeed, they are. And Jakes, thanks for the kind words. We'll keep our endeavor to make sure that we always give viewers the best of information. You spoke about crowded trades and good companies. I'm thinking of ITC right now. It's a stock which has not done well all through the year, and today we've seen a big decline on this one, down about 7-8%. How does one approach companies like these which are going through, say, tough regulatory times?
The fact that ITC is going through regulatory, should I say, headwind is not true for just today. It's not 2015. Since 1985, when I entered the markets, I know that every budget used to mean higher excise duty imposition on this company. Today, you might have it in the form of a GST, where the rate seems alarmingly high, if you will, the demerit rate. But if you go over the last 25-30 years, you're talking about headwinds having existed right through. And what has ITC done in the interim? Just produce more and more cash flow. So the reality is that probably the valuation has not been unlocked. But if there is, and I'm not specifically commenting on ITC, but if you were to look at a trade like ITC, which is a company with cash flows not getting valuations, I think there is a almost near consensus that it will be an affected party in the short run. And yet the market cap's not small. There is a SOOTI holding held by the government. Yes. I'm sure you asked the #1 shareholder, British American Tobacco, to come and take a stake. He'll do it tomorrow morning. And yet, sometimes it mystifies me that the government continues to hold on to a stock like ITC, which year after year keeps getting beaten by the same government, which goes against the concept of, cigarettes as a big evil of the society, if you will. And yet ITC continues. The big shareholders, I'm sure, are interested. So it's sometimes, mystifying, if you will, but I think, but I don't think ITC is about to, roll over and play dead kind of thing. I think it's fine. It dropped 7%. It's been a wealth creator for a long period of time, not necessarily in the last 2 years.
But the problem I think now is that the cumulative impact of the taxes is being felt on the volumes, right? And this time around, if this GST rate comes through, then there'll be a big price hike that they'll have to take, which will once again hit their volumes quite a bit. So for a long-term investor who has ITC, do you think that there could be more downsides in the stock?
See, there can always be downside based on perceptions. Now, the question is, in something like ITC, what is the right PE for it is a big issue. But ITC is also refashioned itself. It's as much FMCG today as it wasn't 2 decades ago. It's hotels and it's a lot of other things. So, I mean, I'm not saying that, it can't go down to by another 10-15%. Sure, it can. These are markets, and markets tend in the short run to, overcompensate. But if you ask me, given all that's happening, the basic theme is that in the frontliners there is everybody knows everything there is on the street, yes. Right? So there are no earnings upgrades. So clearly the markets are feeling the pressure of money getting pulled out. Okay, thank God for the local funds who are kind of compensating for that in some measure. But I think the real returns are not here. I mean, at the end of the day, the returns are where not more than 2 research houses have focused on. I mean, that's the kind of rule of thumb that I use. I don't even say mid-caps, because mid-caps also there are mid-caps and mid-caps. But I think the rule of thumb personally that we are taking is that if there are more than 2 people covering a stock, it means it's already getting to be a crowded trade in some sense. I mean, forget the ITCs and the ONGCs and the others. So in this large thing, if you, as I said, I can't talk stocks, but definitely like aviation as a space was completely neglected. People felt nobody in the world had made money. I mean, I felt that Indigo was way too expensive at the time of the IPO, and I still believe that compared to Indigo, if Indigo's valuations are now the way the screen is telling you, then the others have a lot of way to a lot of catching up to do. Okay. But I think the larger theme here is I think Indigo or the aviation space has come good because of oil. And if that's a sectoral, I mean, that's a sort of a systemic thing that is benefiting us. Clearly, I think if there's one space that is big beneficiary, whether it's the oil marketing companies or it's aviation or paints or plastic packaging, anything which is an oil and oil derivative.
But Jake, in that, are you taking a call that we've seen this in the past. In the last, there was one phase in which the oil fell quite sharply, but had an equally strong bounce back as well. In this, are you taking a call that crude prices are not going to go back, say, above 60 to 80, because it's one-trick pony, right? I mean, if crude changes, the whole equation changes.
Well, if crude changes, then hopefully a number of other things have also changed, which is if there's a fundamental pickup. I'm not denying the fact, and I've always maintained that the underlying derivatives trade in the oil market far exceeded the physical supply. So on the way up, it was overdone. On the way down, maybe it's overdone. And if there is a crowded trade worldwide, I think it is an oil short trade. So maybe it's got some kind of a pullback. But whether it's a lasting pullback, I'm not too sure. So the way I would see it is that up to $60, $65, I think we are pretty okay. Anything beyond that, I think there's a huge trend reversal, which is in danger of coming good. So I think, but otherwise, all sectors linked to oil and polymer inputs have benefited not because of pricing, but because of demand turnaround.
Okay. I wanted to ask you about Tata Motors, since you track it very closely and we generally have these discussions offline. This is one stock that has fallen 20% this year, but now things look like they're improving on the JLR front. On the local front, I mean, the new Tata Zika or Zika, whatever you want to call it, is getting a good response. Do you think that this is an attractive valuation or attractive price to buy Tata Motors for the long haul?
There are these disclosures about stocks, and, and I own Tata Motors as well, but and that's a disclosure which is important. And not that I'm marketing the stock, but I think it's amazing that in the same space, you have one stock hitting new 52-week highs and one stock consistently hitting 52-week lows, which was the case. And again, if that wasn't a crowded trade, I don't know what is, right? Yeah. So maybe that's reversing, but fundamentally you asked, right? And I think if you just look at the way JLR has been churning out brands and churning out, new launches, I'd be very surprised. And that big elephant in the room, which was China, that factor seems to have been pretty much, dissipated. So there's Europe that stepped in to pick up the volumes. America has picked up the volumes. Month-on-month sales are 50% plus the year-on-year sales. And India too. I mean, the thing finally is that you need to have an LCV turnaround. I think that's still elusive. I think for the first month, they seem to have given Ashok Leyland a sort of run for its money in terms of the M&HCV segment. So maybe things are turning around, and I definitely believe that if you go by what the chairman and the other people have said, it has bothered them, much more than it has bothered anybody else. So I think definitely there is a turnaround in Tata Motors which is already underway and perceptible. So I personally believe the worst is over.
Okay, that's on Tata Motors. Of course, before that, Jakes was referring to some aviation companies, and Jakes clearly does not want to recommend stocks. But if you could hear him, Indigo is still expensive, and some of the others could play catch up. And you have only 3 listed players as far as the aviation companies are concerned. So you could.
I want to just qualify that by saying I felt Indigo was expensive. The market seemed obviously proved me wrong, and which I'm very happy for. But what they've ended up doing is it's ended up re-rating the space.
Yes. So you're saying that there's further scope for re-rating if Indigo can trade here.
Even if it trades at these levels, I think it's got a lot of catch-up to do.
A lot of catch-up to do. So that's the limited point that I wanted to make, because a lot of retail viewers watch the program. Jakes, a word on IT and pharma. I mean, and IT more particularly, you have a situation where the US economy is looking good, where the Indian currency is depreciating, and you have TCS hitting a 52-week low. I mean, for a general retail viewer, how do you explain that?
You can only explain that by one line, that there is foreign selling in the markets. Foreign selling happens in terms of ETF selling, and the basket consists of, most of these index stocks, and TCS takes pride of place in that. So there is 100% overseas money which is still leaving Indian shores, and I think that may continue for some length of time. I think the reality is that there is no big inflow in any case. If anything, at the margin, it is now becoming a larger outflow than we expected. So given that, I think it's more of a flow issue than anything else, but somewhere in the next 5-7%, I think TCS and other frontline IT will find a flow. Coming to pharma, it's a little more event specific. I think goings on in the US FDA front, etc., are areas of concern. And I think some Indian companies may have, been caught on the wrong side of aggressive this thing. But there are enough names in the space, which I can't talk about, but which are doing extremely well. And I'd be very surprised if, other than a derating because of the space, but individual companies, and all you have to do for individual, retail investors is to see that in a space of, let's say, where there are 15 companies, if the top 4 or 5 are 25% below peak, but some of the others are only 3 or 4% below peak prices, so you know where the outperformance is coming. So I think it's without going through names, but that's the one way to.
Sure. Okay, before we let you go, one last question from my end. Since we're talking a lot of the dichotomy in a lot of sectors, private banks is one sector where we've seen a huge dichotomy this year. ICICI Bank is down 25%, while IndusInd Bank is up 20%. Between the two, if you had to buy one now, which one would it be?
Frankly, I wouldn't buy either, to tell you the truth, and for very good reasons. But without sort of getting into that, I think there is an issue here that banks trading at multiples to book is now going to get questioned and challenged. If Indian PSU banks have been trading at 0.6 and 0.7 times book, there's a very good reason why they have been, and we know the reasons. But the good news may well be that I think the NPA build-up and crony capitalism is definitely finding less and less favor in this country. And if that's the case, then incrementally NPA build-up not being there, I think there may be much, much bigger value in the PSU play.
Okay, so one last question from me as well, Jakes. We are clearly in a bottom of stock picking market.
Sure.
Earnings are not improving, and as you said, overcrowded trades will not play out. Are we in for a situation where the 9100 top for the Nifty remains there for a really long time, maybe for entire 2016, and individual stocks still making a lot of money?
Very possible. Would I put my money on that eventuality? Frankly, I don't. I think anybody looking at the index now, actually, to my mind, is leading himself up the distraction path, because the Nifty or the index for that matter is not telling you much. And to answer your question very pointedly, very possible that could happen. But you could still have a lot of stocks in your portfolio that are up 30-35% over the year, and some that could be down 35% as well if you have not chosen your portfolio. So, quite possible.
All right, Jakes, always a pleasure talking to you. Thanks a lot.
Thank you, and all the very best again for the next several decades. All the best.
I'm sure you will be with us through that journey.
Well, several decades, I hope.
Okay, seems like a long time
Yeah, I
now,
know.
but we'll take it as it comes. Thanks, Jakes, for joining us.
Thank you.
Well, we have Amrish Baliga, who's also been sitting by patiently, so let's go across to him as well. Amrish, you've picked out a couple of stocks for